Okay, perfect. Thank you very much. So good afternoon, everyone. My name is Joana Neto, and I work here at the European Banking Authority as AML data specialist. And I'm coming here today with a somewhat different perspective comparing to other presentations, but nevertheless complementary for sure. As I'm going to provide an overview of the regulatory and mostly the supervisory responses at the European level to the rise of cryptocurrencies. So disruptive technologies such as the virtual currencies business models may also pose an impact to the integrity and to the stability of the financial markets, of course. And because of that, it is important to understand how to ensure the balance between the opportunities, but not only the opportunities, the risks as well. And despite it's the responsibility of each one of us to make a responsible use of virtual currencies, or by the way, any other form of financial instrument, it is up to the regulators and supervisors to safeguard the integrity, the efficiency, and the orderly functioning of the banking sector. And how do they do so? They do so by assessing how existing regulatory frameworks capture those risks and assessing what are the challenges that we face, which require adapting regulations to meet these new needs. And here is where the EBA takes action as our evidence-based advice helps shape informed policies and laws at the European level and also at the national level. Specifically in the area of AML CFT since 2020, the EBA is the sole responsible to lead, to coordinate, and to monitor the AML CFT efforts of all the European financial service providers and excuse me, and competent authorities. And virtual currencies have for a while been one of our main focus, is going to keep like that, and we are following the matter quite closely. As Nathan this afternoon in our first presentation, I'm also going to use a timeline. And it's just to guide you through an indicative evolution, and I should stress this out that it's only an indicative evolution of the regulatory and supervisory responses over the years. And because Nathan already did from an international perspective, I'm going to briefly focus more on the European level. So let's travel through time into the past and go back to 2009. And please bear with me because this is going to be a very quick time travel. There's a number of events since the creation of the first cryptocurrency back in 2008, 2009, as you can see, which contributed to the policy developments around the world as we know today. And for example, the first international formal reaction started roughly around 2014 with the FATF report on virtual currencies, which introduced a conceptual framework for understanding and addressing the money laundering and terrorist financing risks associated with virtual assets. At the European level, already the EBA in 2013 published a warning to consumers on virtual currencies, which was then followed by an opinion on virtual currencies, where a recommendation is made for the very first time to the European Commission to include virtual currencies in the scope of the regulatory perimeter. Then, following an increase in the popularity of virtual currencies since particularly 2017, there's a series of regulatory actions, but it's only quite recently in 2018 that new international standards were adopted to create requirements for information sharing in the transfer of virtual assets in the same fashion that is done for transfer of funds. And in the same year, then at the European level, we have massive achievements. We have a great achievement with the inclusion of custodial wallet providers and providers engaged in the exchange between virtual and fiat currencies, and in the scope of the list of obliged entities of our Basel AML directive. And in this very same year as well, MiCA, the market in crypto assets regulation, starts being developed. It's not here because, as I mentioned, this is only indicative, and I'm going to talk about that later on. Then we have a series of important deliveries at both international and European level, for sure, but we are not going through them just conscious of time. Important to retain, though, that over the years, the EBA, also following the international approach, has been very active in setting recommendations, including the inclusion of other types of virtual assets in the scope of the AML CFT regulatory products. So now we jump straight with our time machine into 2021. Welcome back to our year. For some, it has been a good year. For others, not really because of COVID, but for virtual assets, actually massive milestones have been achieved. I'm not going to focus on the international aspects because Nathan already mentioned those, but then at European level, we have the money laundering, terrorist financing risk factor guidelines issued by the EBA, which mention crypto assets. We have then the reminders consumers about risks of crypto assets, and we have the EBA opinion on the money laundering, terrorist financing risks affecting the European financial sector. And here we are going just to make a small break from our timeline to present exactly the findings of the latest opinion and to provide a bit of more of context on what is and what were the findings in respect to virtual currencies. So a bit of context about the opinion. So since 2017 and every 2 years, we have been issuing what we call opinions, where the EBA looks at money laundering financing risks and how these evolve over the years. The latest one, as I mentioned, was published this year in March. And since the latest one in 2019, that virtual currencies have been mentioned as a risk to several jurisdictions. In this year's opinion, competent authorities have been asked how this risk has evolved since the latest one, and the results are indicated in this in this graph. So I'm going to use a laser pointer because it's easier to guide you. So most of the competent authorities actually, they indicate there is some risk associated to virtual currencies. 33% of them mentioned the risk was identified in 2019, but its level has remained consistent since then. Then 27% of them mentioned that there was no risk before, and it has emerged, which actually is quite concerning. Then 17% of those competent authorities said there was a risk there before, and that the risk has even increased. And then we have a very peculiar set of competent authorities that mentioned that there was no risk before, 15% of them, and it remains still not a risk for them in their jurisdiction. And then 8% mentioned there was a risk there in 2019, but that risk has decreased. So what does it mean? It means that across the European Union, the use of virtual currencies is associated for sure to some sort of risk, but it has evolved in different ways in the different member states. And we have asked the competent authorities, what is that risk linked to, what in their views? And we have several reasons behind it. We have several risks. First of all, the market developments. As many competent authorities attribute this to the constant growth of the virtual currency market in terms of both the number of transactions processed and customers. In addition, they also mentioned that several competent authorities identified particular concerns related to the use of virtual currencies for terrorist financing and fraud purposes. And they also identified that there is an increased risk appetite from firms, sectors, for virtual currencies related business, notably in the context of the provision of financial services to VASPs. And then another risk is related to the characteristics of the virtual currencies itself, namely the limit transparency of transactions and the identities of the individuals involved in these transactions. And also, when it's about the exposure to risks, they have identified to have concerns, particularly with credit institutions, investment firms, electronic money issuers, and payment institutions. And then we have two other sort of risks as well, which are slightly different, but which have been identified. We have the risk related with the regulatory landscape, as often due to the often unregulated nature of the associated products and services, and the risk that links to the supervisory knowledge, the knowledge of supervisors in terms of the business models, and the perception by competent authorities of the limited overall understanding of money laundering risks in those sectors. And in respect to these last two, it is clear from this opinion that it remains very challenging for competent authorities to stay abreast from market developments and effectively to apply their current legislative framework. This is then even exacerbated by the number and type of currency activities that currently, and I should stress this out currently, and we are going to talk about that later on, fall outside of the scope of our AML directive. And bearing this in mind, the findings from this opinion and other EBA products, we have been very active in addressing recommendations to competent authorities, to consumers, and the Commission itself, namely to consider the recent revisions of the FATF standards and guidance regarding virtual assets, to also include BASPs, they are not payment service providers, in the scope of the AML CFT framework, and to consider a consistent authorization regime. So we go back to our timeline again, and until now, transfers of virtual assets have remained outside of the scope of the Union legislation on financial services. This then exposes, obviously, the holders of crypto assets to money laundering terrorist financing risks. This is because the flows of illicit money can also be done through the transfers of crypto assets, of course. And indeed, following the EBA advice into international policy developments, new substantial milestones have been achieved quite recently. Namely, the European proposal for a regulation on markets in crypto assets, MiCA, which was published in September 2020 and is under the scope of the European Digital Finance Strategy, and which was recently agreed at Council level. And then the European Commission package on AML CFT, anti-money laundering, countering the finance of terrorism. And that is it in terms of timeline. This is how roughly progress looks like so far. I understand it looks complex, but it's to show you that actually a lot of developments, not only at the international level, but at the European level, through the EBA and other agencies, has been done throughout the years. So what is exactly the European regulatory and supervisory response? We mentioned that massive achievement was done with the inclusion of certain types of virtual assets in the scope of the AML directive. But then this year, or hopefully to be adopted in the next years, we have MiCA, which once adopted will have the effect of expanding the European regulatory perimeter to a wider range of crypto assets activities to help regulate currently out of scope crypto assets and their service providers in the European Union, and will provide as well a single licensing regime across all the member states by the goal is 2024. And then we have the second one, which is the AML CFT proposal, which will align the scope of the AML directive and AML regulation and the funds transfer regulation with activities covered by MiCA as well. And in terms of the AML regulation specifically, what is going to happen is that all types and categories of crypto asset service providers will be added to the list of obliged entities. And in terms of the funds transfer regulation, which initially was only for transfer of funds, its scope was extended, so the exchange of information is now extended to the transfer of crypto assets as well. So we already have a flavor of the new to be, but is this enough? We also know that, as mentioned in the slide, the technology and business models deployed in virtual currency industries have evolved significantly over the years, and the regulators and supervisors have made the effort to mitigate risks rising with them. But would this be enough? Well, first, it's important to say that an holistic and systemic approach to the matter is crucial. And I love those two words, holistic and systemic. And what does it mean? It means that to fight and prevent the use of financial system for the purpose of money laundering and risk financing, it's important to consider a different set of perspectives. And how to do that? Well, first, in respect to the Commission's recent proposals, although regulation and oversight of virtual currencies activities and actors are going to be further strengthened in the future, as a result of the legislative proposals, it is important to keep developing supervisory actions, but supervisory actions that are intelligence-led. And what second point is that what we need to ensure as well is a tighter cross-sector cooperation. This is a magical word as well in our world, cooperation, collaboration on AML CFT supervision. And in this respect, two points need to be highlighted. First, it is crucial that competent authorities closely monitor developments in this area, doing so through close cooperation and contact with industry stakeholders as yourselves. Second, that in the meanwhile, competent authorities perform formal sectoral assessment of the risk arising from such services and products and promote risk awareness and guidance to the industry. And also that consider the extent to which the financial sectors they supervise are particularly exposed to the risks associated with virtual currencies. However, to do so, it's of the utmost relevance that supervisors are also properly trained up on these innovative business models. And we have identified that as that there may be a weakness. And why is this all important? To ensure that the industry and supervisors are conscious of the actual risks that come with virtual currencies. And therefore, there's a dual application of the central concept that we have in the area of AML CFT, which is risk-based approach. And then last but not least, the use of virtual currencies is continuously growing, that is for sure, no way to deny that. And the EBA, with its role, it's continuing its work to enhance the monitoring of market developments. And we are doing that also in close cooperation and contact with the other agencies and key stakeholders. So that's all on my side. Thank you very much.
Thank you, Joana. Thank you very much. And I want to leave the last couple of minutes for Q&A. So we have, again, a lot of questions on Slido. I guess now you have time to read them and maybe just reply to a couple of them. I see some were really upvoted.
Okay. Does it have a list of all VASPs currently licensed in the European Union? Well, as I mentioned, this is indeed in our AML directive. So AML directive is what basically dictates what we have to do at the European level. And the fifth one include only two very specific types of virtual assets. Now, the extended scope aims to cover most, if not all, of the VASPs with MiCA, the Market in Crypto Assets regulation. However, this regulation is currently under discussion, even though it has been agreed 2 weeks ago, if not mistaken, at the Council level. And that one will dictate what in the future are going to be under the scope of the supervisors as well. Does the EBA get input from the private sector on the regulations and how? We have several channels of communication. We have, first of all, we do most of our work through the competent authorities. So the competent authorities are our direct line of coordination, and then competent authorities themselves, they do work with the private sector quite closely. On our side, we do have open channels with, for instance, the Innovation Hub, and whenever we have to draft specific guidelines or specific products, there is a consultation paper that goes for public assessment, and you are all very welcome to provide your feedback on the several products that we publish every year.
Thanks, Joana. Thank you very much. It was a pleasure listening to you, and thanks for being with us today.